All right, guys, so everyone is paying attention to the US. The attention is there, right? Now, let's focus on what is happening in October. October is the month where we have the 20th Congress of the Communist Party. If I'm wrong, please let me know in the comment section, but I think that's what's happening. That's a very important event. Everyone is talking about midterms in the US, shakara, 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 FOMC, shakara, 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 but everyone's forgetting, or they don't have on their radar, the 20th get together of the Communist Party. It's so important because no one is talking about Chinese stocks. You still have the apes, you still have everyone discussing growth. Now the new topic is the gargantuan amount of short that is going on Apple, and people thinking, well, of course, it's moving away from Tesla because they're covering. It's not because they are increasing. Basically, the idea behind the whole thing is, okay, they are covering shorts in Tesla, so therefore now Apple looks like they're shorting it massively. Now, yeah, great. You want to short the biggest, greatest, and most creative and dynamic company on Mother Earth. Good luck with that. I'm not saying it's not going to move lower. I would love to buy Apple with the current roster of products and everything for $100. Hey, listen, for $80, I would love to do that. But guess what? They're not dumb. They're not going to let it happen that easily. Of course, we continue with the same narrative. Jerome and the Circus du Soleil, they will continue doing what they have to do, and that's pretty much also what it's fueling. It has to fuel our sentiment, our guts to fight the Fed. Doesn't mean that we're going against it. It's that you have to be active, proactive, and you have to develop the skills for you to fight back and don't let them crush, at least in the short term, your portfolio. That's all it is. So let's focus on China and let's open doors to discuss what's happening on the EV sector, where China as a whole, as a country, has billions of dollars invested because they want to move from the age of burning coal into a more clean environment because they need it. They have 1,400 million people there. That's 1.4 billion, right? So I'm probably saying that incorrectly, but the number is 1.4 billion people in China. That's the real accurate number. In the US, you have 330 million. So at the end of the day, both are very dynamic and very crucial markets for the world economy. Now, look at what we have here. Monthly chart, NIO, ticker symbol, NIO. Look at this trend it's showing so far in this month. 4.97%, and look how it's moving. It's in the middle of the range, but we know what was happening here. Before the earnings a couple weeks ago, 2 weeks ago, it was minus, I think it was 6% down in the pre-market. Look at how it went all the way back. So it's trapped bears again. And the projection based on this area, this rotation area of $9.80, it tells us we can push higher in a good environment, in a good policies, relaxing financial policies in Shanghai and Beijing. We can push all the way higher to 32. Some of the analysts, they see the fact that, yeah, probably they are selling the same or less vehicles, but they have a little bit better margins. So that's very important for your operation. And yeah, there's still a loss, but things can change pretty soon as, for example, the team, Catherine Wood team at ARK Invest, they actually are expressing that EV sales are not going to be linear as a lot of people think. They're going to go exponential. When that happens, absolutely one of the runners to take the best of the market, not only Tesla, would be NIO. There's strength that we can see based on this market structure. There's not a surprise. You can look at it. Now, this is a channel for you to learn how to trade options. Basic strategy only, okay? We buy calls and we buy puts. That's all it is. So that's what I do with the market surveillance. One of the tools I use is Quote Media. So for example, if you don't have a option aggregator or one of those tools out there that is studying flow, or you don't have an in-house proprietary algorithm like we do, and we have several of those that do very specific, they scan the market in a very specific configuration that I have. So let's say you work on NIO and you don't have any of those, right? You can start with Quote Media. It's free, okay? So what I will do is go to option media, option chain, and I want to make sure I have time. I want to avoid mid-turn because yeah, those events, they are important and they inject short-term volatility to the market, but you still want to follow the fact that a NEO is showing strength on the monthly chart. So what I will do is just focus. You click on each one of them and remove them and go to December. I'm gonna give myself plenty time. Now the stock is trading at $20.90. The first thing I do is I look to pay value, and this is something that, yeah, because of the how much it costs, retail traders tend to look for that extra money on weekly calls, but that's a double sword edge. It can work very well for you, but when it doesn't, you burn premium fast. Premium is what you pay for your contract. But in this case, I will go with the 20 and look what's happening. The open interest has 5,197 contracts. That means that there's action. Now, the one that has the most is the 30. But just as a simple exercise, think about this. What's most likely to happen? That we are at $20 or above, a little bit above $20 by December 16 of this year, with all the talks about recession, or that the stock actually makes a run up to 30. Now, I did the math based on everything we have on the area and the projection. And yeah, we can be at 31, but that's an event where we're actually looking for a contract that is out of the money, OTM. And yeah, there's a probability for this to happen, but I'm looking for high probability and very low risk. That's the difference between trading and actually when you run a portfolio. Our MSA has been portfolio now being labeled all weather, very similar to what Ray Dalio and other hedge funds are doing. So when you look at this, the idea is not just to, okay, deliver profits, is how you deliver them. How you did it is very important when it comes to portfolio management, and that's the difference. So no offense to anyone out there, you know, a lot of my buddies, they have their Discords and everything, and that's great, and we make money, you know, that's fantastic. But when you're teaching newcomers and when you actually are working with retirees or colleges, the story is different. You have to pay attention to what you're doing. So I will be willing to pay more for a higher probability for the outcome to produce alpha. That's what we're looking for, alpha. We're not looking for beta. You can get beta just by, I don't know, probably saving now at the rates, the way things are going. So there you go. This is the contract. Now, pay attention to what I will do. First, couple of pointers. The implied volatility, usually if it's very high, usually if it's, I would say if it's past 1.00, 100%, you probably want to sell the put, but I don't do that, right? That's the basic strategy. Now, the delta 62, the delta is just the way the premium will change. So probably you'll have to add to your current premium like 62.2 every time the stock goes up $1. And then you have the gamma. Gamma is the speed and how the delta will change. So the next time the stock moves $1 up, you won't be adding 62.62. You will be adding the sum of these plus these, and it will be a new delta, okay? And there's time. That's very good for a lot of people when you actually sell the options. A lot of people, they have the theta GAN. I don't do it, but again, it's just because of the basics that I do. So trading options 101 in the US equity market. So there you go. This is the way I would play. I will take probably one contract. If you're new to the game, if you're new to the business of trading options, I will take one contract, okay? That will be 3.43, one contract, 100 shares. That means that this contract will cost you about $343. And you always want to look if you can pay less. But for example, look at the low. The low was 287. So it's not that much. Volume yesterday was very, wasn't that much, okay? But it was there. So that's the basics. Now, what I'm looking as far as opportunities. 5 days ago, this whole thing was 460. So a short-term opportunity, I can look to buy at 343 and look to sell at 460. Not a lot, but you make money, right? Also, if you have, for example, 10 contracts, that will be a nice trade to take for short-term traders, right? Now, investors following the all-weather portfolio, what we want to do. If we take 2 contracts, you want to sell the first contract at 50% of the entry. Okay, so 343 It's, for example, just take the calculator real quick just to finish this video, right? So 343, okay, divided 2, 171, 343. You want to sell the first contract at 50% profit. That's $5.14. Okay, that's when you have two contracts. And then your second contract, if you get it 343, you want to sell your second contract at 100%. Now, there are different structures that we follow at the Markets Finance Alliance, but this is just to show you how you need to have a plan, have your game plan before you place the trade. For those of you that you trade weekly, my suggestion, my recommendation is make sure you have this before you do it, because weeklies, they might move fast. So in a weekly call, you probably want to make sure you actually exiting everything for a 50% profit. Okay, so that's what I have for you today. This will be my first video for the day today, and pay attention to something else that is brewing out there. Yeah, midterms, FOMC Wednesday, great. But guess what? The Communist Party is going to get together for the 20th time, and you want to pay attention because whatever comes out of that meeting, it will be very important. So far, stocks like NEO are looking bullish. This is not the only opportunity, but this is one I have for you today. Guys, thank you so much for watching. Appreciate the support. Remember, you want to subscribe only if you want to watch my videos, because you're going to pick this information, technical analysis, and you're also gonna find an idea. You might want to use this idea to go against me, that's fine, or you might want to use this idea to probably go with the out of the money. Remember, it will have less probability to happen, but then again, you have to make your own decisions. Guys, I'll let you go, but never forget, someone always knows.